Hey everyone, this is Charles Sniper again with a weekend review of the major indices. So this is going to be for the upcoming week, which is going to be the last week of March. It's another week that is ending the quarter from the calendar perspective. So yeah, let's have a brief look at what exactly happened in the last week and what could potentially happen for the next week. So with that in mind, let's get started directly with ES, which is S&P futures. And as we can look at it, what happened last week primarily was, again, the chart is aligned in such a way now, um, where you see the weekly on the left side and daily on the right side. And also I have added MACD here to see, what exactly is happening from the longer term perspective. Okay. So when we look at this entire down move that happened from January, and so it's going to be S&P, and it has bounced almost to the 61.8 retracement, which means it bounced two-third of its value. Okay, so now based on that bounce, what we have here is it did everything that it could do to return back to the bullishness. Okay, so again, this is going to be this candle that you see here, because this is futures which already opened. This candle is going to be for this week. Okay, so now from weekly perspective, we are trying to kind of stay above the 20 weeks average, which is a very healthy sign. And as you can see, if you can manage to kind of consolidate here for this week and next week, we have a very big area to cover to the upside from this to this. Okay, so we have to really wait and see. When we see the weekly volume, it's kind of low when compared to the last week's bounce, but MACD is about to cross to a positive crossover near the zero line, and the longer it stays above these averages, the more chance of it staying higher. Again, the 61.8 retracement, which is two-third value, is typically a strong resistance, which means here this is the level where the bulls and bears fight with each other and decide on the direction. So, as part of the fight, the stock or the index can move between these three very comfortably without major hesitation. So as long as it is staying above this one-third level, we should be good. Okay. So that's on a weekly. On a daily basis, what we are looking at is we did the market moved above the 5 and 8 averages, the two lines that you see here, on March 15th, and so far every day it is closing above 5 days EMA. So again, have been a very big person who says that uh, you should not fight the trend, and use the 5 EMA as a base to decide on your direction. As long as it is staying above 5 days average, which for now it has been 9 days so far, there is no reason for anyone to play bearish. Okay, so use that 5 days average, and if you are a long-term trader, use that 5 weeks average, which is the gray line here, which is a little bit down here. As long as every week the value is above that, you can continue to play to the upside. Okay, you don't need to panic. A lot of people might say, oh, we are at a big resistance, we might pull back, we will pull back. A lot of people might think that the market has rallied quite a bit from here, it doesn't deserve that much rally, and they go short, like they buy puts, or they kind of get into some other kind of strategies there. But again, to keep things simple, if the market is staying above 5 days average, either exponential or simple, you don't need to worry too much about going bearish. Okay. So now, with that being said, this does not only apply to indices; it applies to any stock. You can use that. So the good thing here for the entire SPY is it seems to be the strongest. It is at a resistance for sure, but it crossed that cloud. Can it lose the cloud and come back down? Yes, it can. It just is around 50 points from 4500 to 4470, not even 50 points. It's just a 50 points, like 1% for it to kind of lose this cloud and come back to normal. Okay, so this week is going to be pretty crucial. We have to wait and see whether it stays above this cloud, it stays closer to these averages, so that it is preparing itself for a breakout higher. That is something we need to watch. So far, decent volume. As long as it stays very close to these levels, we should be okay, and use that 5 days average. As long as it is closing above that, you can continue to believe that there is some strength in this bullish direction move. Again, on weekly, it's last week it closed above all the averages, which is a very, very strong indication that market did not want to at least appear weak. Okay, so if we can test this 20 weeks average again, we can always go to that 5 weeks average on all the way to 8 weeks average. But as long as we are staying above that 5 weeks average and staying above it for a longer time, we continue to stay bullish. Okay, so that's pretty much on S&P side. At a critical resistance, we'll wait and see what happens. Okay, from Nasdaq perspective, we are looking at not such a strong performance as such as S&P. Let's go to look at weekly how it is. So the good thing, what are the good things? The good things is it again closed above 5 and 8 averages. It tested that 50 weeks average, and it moved above the cloud. Okay, as you can see, the curvature of this cloud is pointing upward. Okay, it's probably I mean, it's very thick. Once it gains and stays above that, that gives you a clue that it doesn't want to fall this cloud, at least not until the April end. Okay, there are still some more resistances that it needs to kind of cross. This is 50 weeks. This is 20 weeks. At least going above 20 weeks is something that would be very, very um, bullish. Okay, so it's exactly at 50% retracement. What it means is it bounced back 50%, half of that down range. But as long as it is staying above the cloud, as long as it is staying above that one third value, 38.2, we should be considering bullish. On a daily perspective, same thing from March 15th. It is staying above that 5 days average EMA. It is at a cloud resistance. If it can't cross it above, so there a couple of scenarios, right? There might be a very, very big candle like this on Monday, like this, or like this, which takes you above the cloud, exactly like what happened in ES. It can take you, that big candle can take you above the cloud and then make it stay above it. So that is quite possible. That is a constructive way of thinking, or positive way of thinking, I would say. What And that gives an opportunity for it to test the 200 days average. Okay, it has been 50 above 50 for almost 1 week now, and it's very logical for it to kind of test the 200 days average. Okay, so that will be an attempt to cross the cloud. It may succeed, it might fail, but we have to see. But there is a potential for it to kind of make that leap higher this week. So we'll be watching that. And so far, at a technical resistance again, at 50 weeks average, so that leap will take it to test like this two-third resistance there, similar to what S&P did already. So let's quickly move on to Russell. How it is, it has been the weakest and it is still the weakest. On weekly, it did it is staying above 5 and 8, but it did not cross the 20 weeks average yet. Okay, and it is staying still below the 38 point to 130. It did not even regain above that one-third level. So that will be some critical thing to watch. And it is in the cloud noise, but as you can see, it's trying to consolidate higher above these averages. So as long as it is happening, it will be ready to make that leap higher. So with small cap participating, I think that is good overall for the entire market to continue moving higher. Okay. In the cloud, for now it's a noise, but if it starts to make that leaps, it has a lot of room to go higher. Okay, at least from this level 2100 to all the way to 2172, it can cross those levels very, very quickly. Let's take a quick look at Dow Jones. So on a weekly basis, it moved above the cloud. It is at a very, very thick cluster of resistances. It can test back this cloud once and trying to make that leap to move above this resistance higher. Again, it's between 50 and 61.8, which is a major resistance again. So market is positioning itself very close to those resistance level so that it can make that leap higher on any positive news, either about the war or about some Fed less interest rate hikes. So on daily, it is very, very clear, and most of these indices, except S&P, that it there is a potential for it to kind of stay below the cloud. Okay, that is also possible. So next week will be very telling, and so far last week has been a decent week where it stayed above these big gains. So we have to really see whether we could make another week at least within this inside candle of this week, which proves that it is hanging in there. It wants to go higher. Okay, so it might be a consolidatory week at least in the in the neutral case scenario. So let's quickly look at VIX. Last week it was above 25 level, and now it fell quickly on daily. It's still about 28, but it gave up quite a bit in the last 1 week, almost from 25 to 20s. Okay, on weekly, let's go and see. That is significant. It moved below the cloud. Okay, so what it means is it's doing almost negative crossover of the MACD. It also moved down zero. So what you're looking at is, VIX fading very quickly. I would like to see it become below 20 and stay below it. That helps the market to kind of continue checking along higher. Okay, so a lot of good signs from that perspective. Let's quickly look at put call ratio. So what we are looking at is, let me expand this guy alone. So we have been that we hit that one mark here a couple of weeks ago, and now we are hitting that lower levels 0.42. So a little bit overbought, a little bit overbought in the short run, but if it stays at these levels, hangs around there for some time, the market can figure out a way to kind of stay strong, go through some sideways consolidation, move higher. Okay, so it's coming out of that overbought of puts. So this kind of move, uh, upside move, will burn all those puts that was bought here. So yeah, there might be some consolidation or a little bit pullback, but I think we are not in a panic stages anymore. Even if we move down, we'll be making a lower high than going further high and making lower lows. Okay. So with that in mind, let's quickly look at SKEW. It's at 140, which is very elevated. So that means that there is a possibility of some big move, which is more than 2 standard deviations could happen. So that's another reason for you to be cautious. Um, it's at a very good levels. Market is at a very good levels to move, stay higher or move higher. But again, there is a slight chance that it might give also. And the problem is like you saw in YM, it doesn't take a lot for it to turn bearish. It just needs to lose from here these two averages, and that's it. Everything turns bearish, right? So even from S&P perspective, when you want to look at it, it just need to make that 50-point down and everything looks bearish so far. Okay, so be patient and try to see at least Monday and Tuesday how it behaves. There is a very good scope for it to move higher, but also it can also surprise and move lower also. This upside move was more whenever people buy a lot of puts on further continued down move here, right? It just to kind of burn those moves, high momentum upside move. It tried to kind of clear as many averages as possible, but yeah, as of now, it's at a very strong resistance, so it might do some kind of consolidation between these ranges. Okay. So with that being said, let's look at bonds, which kind of pull back quite a bit here on a weekly, and that's where kind of a very big down move. It could be an exhaustion move also. See how it fell so quickly. So we are making that kind of move. We still have some more room to go down, but I think once it finds a bottom and it starts bouncing, that will be a good signal for the market also to start bouncing higher. Let's see how the futures of bonds look like. Let's look at 10 years. So this is a new weekly candle. It's trying to kind of hold around there, and then 30 years, it's trying to show some kind of farming. It did not make a new low as such yet. So if we kind of hold strong here and start bouncing back, that will be good for overall market, especially the high value tech stocks. It will be good. Okay. So yeah, we can see that it strongly bounces back around this April 15th time frame. So it's quite possible there. So with that, let's do a quick look at Bitcoin also. A very strong gap higher today at least. So it was in the cloud. It moved above the cloud on a weekly basis today, this week at least, and that kind of did this jump over 200 and 100. So these kind of gaps means like it's a very strong thing, and we have to really see, and probably it can pull back to that 200 days and test it out, but it might not. These kind of things, it's a very huge gap, so which means it's probably changing the direction of the trend. Okay, so hopefully it kind of has some legs here. The MACD crossed over, is crossing over this week on a weekly basis, so it might go to these 53,700 levels and kind of make a decision at that time. But overall, that's a nice strong move above 50 weeks average there. And let's look at ETH. So this is also it gapped up on a weekly, and it is trying to stay around the 20 weeks average. So pretty constructive action there. We have a lot of room to go up if it stays around at these levels on a daily. It is at a resistance of the cloud, but if Bitcoin is breaking above the cloud, ETH can follow above too. Okay, so it has been making higher lows, and let me actually get the studies off and see chart wise how it looks. Yeah, so we can easily draw that, it has been forming that higher trend, and when we go and look at it and extend it across, so we have some more room for it to go higher. It recently broke the downtrend also, and from then on, it's kind of going higher. So on weekly, if it stays around these levels, it has some legs to move higher also. So far, looks very, very constructive from crypto perspective. So that's pretty much it. At the conclusion, I would like to say this week is going to be crucial, irrespective of the war or something like that. If the market does slight pullback and stays around this, probably it can even pull back half of this candle, but as long as it stays above half of this candle, we should be in a decent state, positioning ourselves to kind of come out of that oversold conditions and look forward to kind of go higher. So that is a conclusion. Stay cautious on the daily perspective. Keep an eye on the 5 days average. As long as the market is closing above it, you don't need to worry too much about a big down move. But once it starts closing below that, that is the point where you should try to book some of the profits that you have accumulated here on short-term trades. Okay, from long-term perspective, it's a slow process till there is a lot of gap for 5 EMA to catch up. So that proves that there might be some consolidation that will be happening. Okay, so with that, I would like to kind of conclude this here. Hope that was helpful. See you in the next weekend review.